Hi, good afternoon. I'm Bridgid Taylor, and this is Currency Wars. Today I'm joined by Jan Sluis-Cremer from RMB. And before we head into the trenches, let's have a little look and see what's happening on the wires. The sell-off has globally that we saw post the People Bank of China intervention, as well as the reluctance for the US Fed to hike rates, has seen bargain hunters re-emerge and take advantage of cheaper levels to buy both stocks and currencies in emerging markets. Meanwhile, the Asian markets are leading the emerging market recovery, as China is heading into a regional advance in stocks on speculation that the central bank will take more measures to shore up the weakening growth. The recent spate of dull US data, including today's poor retail sales number, has driven markets to push out any hopes of a Fed rate hike this year. This has given emerging markets a chance to breathe as capital flows re-enter these markets. Today we'll be watching the US jobless claims as well as consumer price index for a key indicator as to the sustained recovery that we are seeing currently in the emerging markets. Meanwhile, the recovery in the commodity prices, the dollar weakness, and the less likelihood of the US tightening are all helping the rand to trade much stronger, and this is in line with other emerging markets. But this may be a temporary respite ahead of 2016. We've seen the rand recover this week, and it's traded back towards 13, with the cross rates recovering in tandem to trade 15.05 against the euro and 20.30 against the pound. Right, now that we've seen the lay of the land, Gianni, welcome.
Thank you.
I think it's been a relief, right, to see the rand back at those kind of more sustainable levels. If we look at the cross rates, it was getting into scary territory, 21 against the pound. I mean, that's not a joke at all. So we're kind of starting to teeter off. Do you see this as a story around this SAB-ABI deal with regards to the rand recovery, or do you think us as an emerging market seeing the benefit of this risk back on trade, seeing the rand recover?
Look, Bridge, I think the rand definitely needed a recovery. I mean, as you say, it was frightening up at those close to 14 to the dollar, 21 and some change against the sterling, and even looking like we could see 16 to the euro. So, I mean, we've had a nice pullback. I think there are going to be a lot of happy importers that can breathe a sigh of relief again, that we have seen some strength coming back into the rand. But to answer your question, no, I actually don't think the SAB Miller InBev deal has actually been taken much into account yet. You know, it's still very early days. The offer's only been made in principle. There's hundreds of hurdles they've got to cross, not only with regulators, but with competition boards in various jurisdictions. You know, it's not just a simple, you know, one buys another and, you know, let's put the two together. We are talking the world's two largest brewers.
And I think it's one of the biggest M&A deals that we've seen in a long time.
Correct. Well, third biggest on record, I think I read somewhere yesterday, and the biggest in the UK.
Sure. Because
they look at SAB Miller as a UK company. Yeah. And there's all sorts of implications for us domestically. You know, does SAB Miller get traded and delisted off the exchange? Does it become, you know, secondary listing, and, you know, then you hold shares and it forms part of your offshore allowances? So there are all sorts of, you know, different dynamics you've got to look. So now at this stage of the game, I think we're still a long way from seeing anything on that SAB Miller. The strength has definitely been, as you mentioned earlier, is all emerging markets. Yeah. You know, it's nice to see that, you know, the Fed has now finally kicked their can as far as they can for the moment down that long cobbled road that we've been kicking it for this whole year. Yeah. And it's kind of looking, I think there's a 37% chance they may raise rates in December, but it's now, in all likelihood, going to be probably March, April next year at the earliest.
So that gives us a breather though, right? Because, I mean, the rand, if anything, we've seen, I mean, we've also seen, so we've got a nice little pot of good news. We've got the commodity prices coming back, as you mentioned, with the Fed. That means that the dollar strength is off. So guys that were hugely dollar bullish are now starting to reassess. And there's bargain hunters out there. I mean, we saw what happened to the stock markets. We've seen what's happened to currencies. There's an opportunity to get back in at those better levels, especially if you're pushing that can down for another 6 months. That just gives us some form of respite. So from that global good news that we're seeing, do you think that this is going to be something that's going to play out for the remainder of this year? And what are you really looking for? I know there's the CPI number coming out today from the US, which is obviously quite a big one.
Yeah, sure. I think we've got to be cognizant of the fact and look at data coming out of the States now. You know, we could, like what happened in Europe and what's been happening in the UK, inflation might actually become deflationary in the US again because the rest of the world is contracting. So, you know, there's no demand for any US product. Oil price is low, so that, you know, there's all those sort of factors playing into the American economy at the moment. So they've got to be careful that they don't end up in a deflationary scenario, and then rate hikes are almost guaranteed to be off the table.
Well, this is exactly it. I mean, we've seen, you know, even if we look at the commentary from the last the Federal Reserve, and a lot of people had placed a lot of emphasis that that would be their opportunity, as we do when we talk about the South African MPC. But you're right. I mean, the global picture is a concern. I mean, we look at what happened in China. That's a big player. That's the Asian markets. We're seeing that resurgence now. Why? Because there's a lot of interest coming out of that Chinese market again, because there's that feeling that they're going to stop that deterioration in terms of growth. Whether that comes to pass or not at the moment really just means that the Asian markets are pulling us all forward. So talk to us a little bit. If we talk to inflation, what do you think with regards to the likes of the oil prices, etc., globally? Because those have remained pretty stagnant despite the fact that we've seen other commodities rally.
Look, I think if anything, on an inflationary point of view, the low oil price has certainly saved our bacon in this country, because that is a big contributor to inflation. So inflation might not have run away it would have been, a lot higher than where it is, had we still had an oil price towards the $100 a barrel and $1 was up.
Horrifying. We'd be paying 25 Rand a litre.
we don't even want to think about or go down that avenue. So we've actually been quite lucky in the sense that the oil price has helped us with inflation. And also now with the stronger rand, the lower oil prices, it's given the SARB a bit of a breathing space from also looking at hiking rates again. So, you know, that's probably taken off the table now for this year. And again, look at it next year before we start raising rates domestically again.
No, sure. So we've got, I think, you know, just looking at, you know, obviously for the remainder of the year, the nice thing that we're starting to feel is that there is that resurgence back into emerging markets. Are you of the opinion that we're going to see that continue? Or do you think this is a very short blip in the matrix? Or do you think that this is something that will likely continue until we really start to see proper data that supports another Fed rate hike again and gives it more impetus?
I kind of definitely tend to agree with you. I think, you know, we have come a long way in 2 weeks. I mean, if we think we were almost close to 14 in the beginning of last week, and we are almost a rand stronger with still a trading day and a half left in this week. So, yeah, we might see a bit of a bounce in the rand, but I think any uptick in dollar rand now, whilst, you know, risk is back on, you're going to see exporters coming in and taking advantage that perhaps missed the boat last week and were holding on and waiting for higher levels. So, rand, I'm kind of looking for 12.80 possibly on the cards in the next, you know, week, 2 weeks maybe.
And if things carry on the way that they're going, you know, and I think that that's the big one. What are you looking at? So we've got, you know, we've got a couple of interest rate decisions coming up towards, obviously we've still got one more MPC before the end of the year. Those kind of drivers, do you think that we're starting to see inflows back into South Africa? Do you feel that we're starting to see, you know, guys that were sitting on risk-off trades, looking at US treasuries just because we were in a Fed hiking cycle kind of scenario, now looking to re-diversify that again? Is that the feeling that you get on the desk? I'm
certainly getting that feeling. And I mean, you can see it in our bond market now. I mean, our bonds have rallied nicely the last couple of days with the stronger rand. And, you know, at the end of the day, US is on zero interest rates. Money's got to go somewhere. And where would you go? Well, come to South Africa at 8%, or go to another emerging market at, you know, at higher levels. It can't just sit in a bank account in the US at zero interest rates and collect dust. It's, you know, money's got to work for you. And so emerging markets become attractive again.
I think, just to end us off before I make you give us your view for the week ahead, give us an idea, you know, because I know you sit on the corporate side at RMB, and looking at that, you know, when we look at this kind of volatility in the markets, and you and I both know this, we've worked together, you know, you don't want to create a scenario where corporates are worried about trying to trade the rand. It's about the fact that there is opportunities because the volatilities are there. So yes, you get those 1 rand moves. It's not an uptick of 20 cents to 5 cents. You know, it's a really nice move that you can maximize on. So what is your view in terms of, you know, importers and exporters, just saying to them, guys, you know, take advantage of the dips or hold onto your socks? What is your overall view in terms of your bigger outlook?
Look, I think from an exporter's point of view right now, certainly any uptick towards the upper end of our band, the 1335, 1355, I'd be looking at taking some money off the table. Importers have changed the way they traded. You know, if we think back 5-10 years ago, where suddenly there was movement in the rand, every importer rushed out there and panicked, and then it becomes a pass the parcel because everybody is now running and trying to buy dollars in. I think importers and business in total in the country has actually kind of learned from, you know, past mistakes and rand volatility, and we certainly see, you know, definitely guys today with it breaking 13.20 or 13.32 overnight, and then again this morning we've seen plenty of demand, and so there should be, because if you were sitting on Monday at 13.50, well, today at 13.20, hell, you'd be silly not to be buying some dollars in. But also what we're seeing a lot more of, people are kind of just leaving orders in at lower levels and kind of walk away from it and concentrate on your core business.
Yes.
You know, if you're making nuts and bolts, your business is not to sit and trade foreign exchange.
Exactly. There's somebody to manage that for you. So find a nice level, put it in, give the order to the bank, and let them at least manage that for you.
Exactly.
Yanni, I'm going to put you on the spot in a couple of seconds. We're going to pull out the big guns. Okay, Jan, give us your view for the week ahead.
Okay. As I alluded to a couple of times now, I think 13.35, 13.50, topish for dollar rand. I'm certainly looking for a break below possibly 13.07 down to 12.80 in the coming weeks.
Okay.
Pretty much, and it's going to drag your currency crosses with you. So Euro Rand, look for it to come lower. Euro Rand is in a bit of a broad range, sort of 15.35, 15.40. We've got an outside chance of getting back down to like the 14.90 levels again. Certainly be looking to, as if I was an importer with a euro commitment, look at trying to hoover some in at the
sub 15.
Sub 15 levels. And sterling rand again. Also, it's probably topped out for the moment and look to come lower.
Fantastic. Thank you so much. Thank you. I really appreciate that. So in conclusion, it's good news on the emerging market front. We're seeing nice recovery in the rand, looking for lower levels. That at the moment, 13.32 is still quite toppish. It may go a little bit higher than that, so if you're an exporter, take advantage. However, importers, hold on to your socks. Jan thinks we may see a break of that 13 level and potentially trade down to 12.80. The crosses will follow suit. And until next week, you are more than welcome to send any questions or comments to @CurrencyWars410 or to myself at K1 Capital for your personal response to the FX markets. Until next week, good luck in the trenches.